and our unique status as the world's largest public company holder of Bitcoin. MicroStrategy is an operating company that can actively manage its capital structure and its business operations with more flexibility than an investment trust, which is what these spot ETFs are. So we're going to develop software. We're going to generate cash flow. We're going to leverage the capital markets, all in order to accumulate more Bitcoin for our shareholders, and also to promote the growth of the Bitcoin network.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses about Bitcoin. According to Michael Saylor believes that much of this is simply a reflection of the widespread popularity of Bitcoin is considered an asset class. This investment asset has gained immense popularity worldwide. It stands out for its innovative and digital nature, as well as its global reach. What sets it apart is its uniqueness and the fact that it is not influenced by other factors. Traditional risk assets are not associated with exposure to the current quarterly results of any specific country or company. This product cycle competitor is not affected by factors such as weather, war, employee base, or supply chain. This makes it a seamless addition to any portfolio investor with a strong sense of responsibility. There is a significant amount of demand that has been building up over the past decade for these ETFs. And now, finally, they are here. Mainstream investors now have the ability to invest in Bitcoin, which, according to Michael Saylor, is a key factor behind the recent surge of capital in this asset class. Initially, there was a rebalancing happening as individuals were shifting their capital between the futures market, miners, MicroStrategy, and ETFs. However, after this rebalancing, Michael Saylor made a statement. It seems that the assets have stabilized and individuals are now recognizing that there is a significant increase in quantity. There is a significant demand for Bitcoin through these ETFs, driven by the supply from the miners who act as the natural sellers. And lots of things Michael Saylor discussed, so please watch the video to end. And share this video and subscribe our channel. Everyday Finance, thanks.
Well, I think a lot of this is just indicative of the popularity of Bitcoin as an asset class. It's now the world's most popular investment asset. It's novel, it's digital, it's global, it's unique. And it's uncorrelated to traditional risk assets because it doesn't come with exposure to any given country, currency, company, quarterly result, product cycle, competitor, not to weather, not to war, not to an employee base or supply chain. And so that makes it a natural addition to the portfolio of a responsible investor. There's 10 years of pent-up demand. People have been waiting for these ETFs, and finally, mainstream investors are able to access Bitcoin. And I think that's what's driving the surge of capital in the asset class. And initially, there was a rebalancing as people were moving capital between the futures market and the miners and MicroStrategy and the ETFs. But following that rebalancing, I think the assets found its footing. And now people are beginning to realize that there's 10 times as much demand for Bitcoin coming in through these ETFs as there is supply coming from the natural sellers, who are the miners. Well, it's a natural decision for us, given the success of our Bitcoin strategy and our unique status as the world's largest public company holder of Bitcoin. MicroStrategy is an operating company that can actively manage its capital structure and its business operations with more flexibility than an investment trust, which is what these spot ETFs are. So we're going to develop software. We're going to generate cash flow. We're going to leverage the capital markets, all in order to accumulate more Bitcoin for our shareholders, and also to promote the growth of the Bitcoin network. Given the fact that the majority of enterprise value is now based upon those Bitcoin-related activities, it makes sense for us to call ourselves a Bitcoin development company in the same way as you see a real estate development company or a petroleum development company. No, there's a lot of uncertainty around the rest of the crypto ecosystem, but the one certain element of the ecosystem is Bitcoin is universally acclaimed to be a global commodity or an asset without an issuer. So the one thing we can count on is Bitcoin goes forward in the year 2024, and a strategy built around Bitcoin is generally a pretty safe one for institutions.
Michael Saylor highlights the prevailing uncertainty surrounding the rest of the crypto ecosystem. However, amidst this uncertainty, one thing remains certain. Bitcoin is widely recognized as a global commodity or asset without an issuer. It is worth noting that Bitcoin is expected to continue its progress in the year 2024, making it a relatively secure investment option for institutions. MicroStrategy are currently experiencing a digital revolution where Apple is at the forefront, revolutionizing the world of telecommunication, discussing the impact of cameras and Google's influence on the transformation of books and libraries. Bitcoin is a prime example of how capital is being transformed in the digital age. The majority of capital is now in digital form. With Bitcoin leading the way, the world revolves around investments in real estate, stocks, precious metals, and bonds. As a result, individuals are gradually influenced by these financial assets. Michael Saylor believes that this is a significant factor driving the current trend. Michael has previously stated that if Bitcoin doesn't reach zero, it has the potential to reach 1 million. Let's back to the Michael Saylor interview.
Fair value accounting, it's gonna create much more transparency and clarity in P&Ls and balance sheets for any companies that are holding Bitcoin. I think the real significance is that there are companies like Berkshire Hathaway and Apple Computer that have $100 billion plus in cash. And right now they have to invest it in treasuries and sovereign debt. And with this change in fair value accounting, you're going to have a commodity that's valued as fair value, and it becomes a legitimate treasury reserve asset for publicly traded companies. You know, we're going through a digital transformation of everything. Apple represents a digital transformation of telephones and cameras, and Google's the transformation of books and libraries. Bitcoin represents a digital transformation of capital. 99.9% of the capital in the world is tied up in real estate and stocks and precious metals and bonds. And so we're 0.1% transformed. People, as they get educated on digital assets, are realizing that they ought to be allocating more and more of their capital to this digital asset. And so they're moving from 0.1 to 0.2%. And I think that's really driving the trend. I've said before, if Bitcoin's not going to zero, it's going to 1 million. The real question is it legitimate asset? If it's a legitimate institutional asset, everybody is underallocated to it. They're all factors. Education makes a difference. Institutional adoption makes a difference. The spot ETF news is good news. Loosening of monetary policy is good news. Inflation anywhere in the world drives Bitcoin adoption. And of course, the halving is going to cut the available supply of Bitcoins for sale in half from the miners. And so we've got a confluence of very bullish milestones over the next 6 months. And I think smart money is investing into that ahead of it. Well, we will absolutely continue to acquire Bitcoin. Our strategy is to acquire and hold the Bitcoin, and we will acquire it by a variety of different means as long as they're accretive to our shareholders. So our goal is always to find a way to pursue more Bitcoin per share for our shareholders. And sometimes we do it with debt, sometimes we'll do it with equity, sometimes we'll do it with cash flows from the business. And of course, the volatility in the market just creates more opportunities for us as an operating company. And our particular business strategy allows us to harvest that volatility to the benefit of our shareholders. Well, we're still evaluating that, and I leave that decision to our finance people. But what I'll say about the accounting is I think fair value accounting is a giant step forward for the industry. And up until now, corporations have had to invest all of their spare treasury reserves in sovereign debt. Sovereign debt normally has a compound annual growth rate of a few percent. The cost of capital for most companies is 10 to 12%. Bitcoin's got a compound annual growth rate of 40+% over the past 4 years, and even higher in the more distant past. So having a digital money like Bitcoin as a treasury reserve asset allows you to beat the cost of capital, and it turns your balance sheet into an asset instead of a liability. So we think this is a real game changer for corporations. I think that we'll wait for our finance people to give us that recommendation. I do think that the fair value accounting guidelines from FASB are just going to be good for the industry in general. They'll provide more transparency, and they'll be good for Bitcoin as an asset class and for Bitcoin as a treasury reserve asset for companies that have large cash flows that they want to carry forward.
MicroStrategy will continue its acquisition of Bitcoin. According to Michael Saylor, Saylor's strategy is focused on MicroStrategy aims to creatively acquire and hold Bitcoin in order to benefit its shareholders. The company employs various means to achieve this goal. MicroStrategy consistently seeks opportunities to maximize Bitcoin per share for its shareholders. This can be achieved through various means, such as leveraging debt or utilizing equity. Sometimes, MicroStrategy deal with the cash flows from the business, and the volatility in the market presents us with additional opportunities. MicroStrategy's operating company and specific business strategy enable us to capitalize on market volatility for the advantage of her shareholders, Michael said. I believe we should wait for our finance team to provide us with that recommendation. Michael Saylor believe that the fair value accounting guidelines from FBI will have a positive impact on the industry. In general, increased transparency will benefit Bitcoin as an asset class and as a treasury reserve asset for companies with significant cash flows to retain. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.